Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. I've got some foreign exchange charts I'd like to go with you, and I'm going to start with the euro dollar. Now, looking at this, you'll see a bullish engulfing pattern yesterday, which counters the previous session's bearish black crow. It nevertheless maintained the bracketed zone of the previous session between the same minor overhead Fibonacci resistance at 112.38 and the support of the significant 38.2% Fibonacci level of the old 2017-2018 move at 111.86. Now, I decided to draw a bearish Andrews pitchfork on the recent action from March through to early June, mainly because it looked ripe for one, and found out that the Tuesday low was just off the descending middle time, which is currently 111.65, and thereby immediately validating it. Today has been an interesting day already, as we've seen a strong follow-through higher to the previous bullish engulfing pattern, as prices so far have made what looks like an opening along white Mariposa and punched up through not only the medium moving average, which is currently at 112.59, but also creeping up over the important, very recent 50-cent Fibonacci line at 112.78. Yet, we're still within the middle time and upper time. That one's actually at 113.10. All this recent action does not dissuade the idea of a big head and shoulders top formed over 2017-2018 with a target X in the 104.85 area. Next chart I'd like to look at is cable, sterling against the US dollar. And on this chart, you're going to see a second bullish white soldier yesterday, and it complements the prior day's bull hammer pattern as well as a close up over the middle time, currently 126.24, of the bearish 2019 Andrews pitchfork that's been pointing this market since May. Today, we've moved further higher, though we're running into a small congestion zone from earlier in June, 126.80 to 127.5. These actions have dented but not yet removed the idea that moves, or at least most of the moves of the whole of 2019 so far, are a head and shoulders top with a split head. If this carries on, then the target X on the downside would be in the 123.45 area. The next chart I'd like to look at is euro against sterling. And here we see a second bearish black crow yesterday and a follow-on to the previous bearish harami pattern. The pressure was enough to close back below the congestion of the indecisive doji crosses from last week. Now, I don't know if there's a collective noun for doji crosses, but that may be it. And also below the 50% Fibonacci line, the August 2017 to January 2019 move at 88.88, which was also a former target level. Today we've done nothing so far. This counters a little the pressure from the recent rare monthly key reversal up made last month. The next chart I'd like to look at is the US dollar against the Japanese yen. And this is a messy chart, this one. A second bearish black crow yesterday and a follow-on to previous sessions' bearish double patterns. This is a continuation from the failure to close up over the same old and expected significant overhead resistance from the 50% Fibonacci line, the 2019 move so far at 108.67. This time, when the market moved down, it closed clearly below the broken but seemingly still influential 2016 to date uptrend. That's currently at 108.36. Today we've continued to decline and made new recent lows as we've moved to test the middle time, currently 107.58, of the recent bearish April to May shift pitchfork. The last one I'd like to look at is the Aussie dollar against the US dollar. Now here we have an indecisive, though long-legged spinning top pattern yesterday, which, while supporting the turnaround back up earlier this week, also seemed to be passive-aggressive in its response. Now, I mentioned recently that it was, and I quote, absolutely not a surprise for the turnaround. It would be a surprise if it was anything other than temporary at this time, end of quote. I think that is where the passive-aggressive nature comes from. The market still continues to work its way lower between the upper time, currently 70.68, and the middle time, currently 67.68 of the big bearish December 2018 to January 2019 shift pitchfork. Today, we're within the same range, just towards the top right of it. Thank you very much for listening and good trading.